Welcome back to the Conveyance Desk. In episode 18, we covered when transfers fail, the 4 failure categories, and how pre-flight checking preempts them. Today is episode 19, and this one is about foreign buyers and sellers, document attestation, MOFAIC legalization, signing remotely. Fund transfer logistics. What changes when one party is overseas? Quick reminder. This is general educational content, not legal advice. Cross-border transactions involve jurisdictions and rules outside Dubai, so use this as a guide. Then validate the specifics of your home jurisdiction with someone qualified there. Here is the framing. Dubai is a global property market. A significant share of buyers and sellers are not UAE residents. They live in London, Mumbai, Karachi, Lagos, Almaty, Moscow, anywhere. They buy through visits. They sell through trips. They sometimes never set foot in the UAE during the transaction. The property transfer mechanics do not change for foreign parties. The documentation around them does. 1. The 2 attestation directions. Cross-border documentation flows in 2 directions. Documents executed outside the UAE that need to be valid in the UAE. Po as marriage certificates, birth certificates. Corporate documents. These flow through. Originating country notarization. Originating country foreign ministry attestation. UAE, embassy or consulate, legalization in the originating country. MOFAIC, attestation in the UAE. Translation into Arabic by a UAE sworn translator. Documents executed in the UAE that need to be valid abroad. Title deeds. Corporate resolutions. Powers of attorney for use overseas. These flow through. Notarization by a Dubai notary public. MOFAC, attestation in the UAE. Destination country embassy, legalization in the UAE. Translation into the destination language by a sworn translator, if required. The UAE is not a member of the Hague Apostille Convention. Both directions require full consular legalization. Apostille alone is not sufficient. 2. Why the chain breaks. The chain breaks when any single link is missing, the most common break. The originating country's foreign ministry attestation is missing. The UAE embassy in the originating country will only legalize documents that have been pre-attested at the originating end. A document going straight from the originating notary to the UAE embassy is rejected. The chain restarts at the originating ministry. This adds days, sometimes weeks, the second most common break. MOFIC, attestation is missing. The trustee desk requires MOFAIC's stamp on every foreign document. A document attested through the originating country's chain but not yet processed by MOFAIC in the UAE is incomplete. The third most common break. Translation is missing or done by an uncertified translator. The Arabic translation must be by a UAE sworn translator. A translation done abroad, even by a qualified translator, is not accepted. 3. The realistic timeline. The full attestation chain takes 2 to 6 weeks, depending on the originating jurisdiction's processing speeds. The consular load at the UAE embassy in that jurisdiction. The MOFAIC turnaround in the UAE. The translator's availability. Plan accordingly. A buyer or seller overseas who decides to use a POA 2 weeks before transfer day is a buyer or seller whose transfer is going to slip. 8 weeks is the safer timeline. 6 is workable for jurisdictions with established consular processes. 2 is rarely achievable. 4 costs. MOFAIC charges per document. AED 150 per personal document. 2,000 United Arab Emirates dirhams per commercial document. The originating country's attestation costs vary. The UAE embassy in the originating country charges its own legalization fee. The translator charges per page. Total cost of a single attestation chain for a personal document, including translator and consular fees, typically runs 1,000 United Arab Emirates dirhams to 3,000 United Arab Emirates dirhams. For corporate documents, the cost is higher because the underlying documents are more numerous: trade license, certificate of incorporation, memorandum and articles. Board resolution. Each requires its own chain. A foreign registered company transferring property in Dubai is looking at 8,000 United Arab Emirates dirhams to 15,000 United Arab Emirates dirhams in attestation costs alone. Build it into the transaction budget. 5. Signing remotely. A foreign buyer or seller who cannot attend the trustee office signs through a power of attorney. The POA is the most common cross-border instrument in Dubai property transfers. It must be executed in compliant Arabic, Nail, Milish, bilingual format. It must specifically authorize the property transfer. It must name the property by community, building, unit number, and title deed reference. It must comply with DLD Circular 29R, 2025 verification requirements. It must be notarized by the originating jurisdiction, run through the full attestation chain, translated into Arabic. The attorney named in the POA attends the trustee office on transfer day, signs Form F, receives the checks on the seller side or hands them over on the buyer side, executes the transfer. The principal does not need to be physically present. 6. Fund transfer logistics. Foreign buyers fund the purchase by international wire transfer. The funds typically transfer to a UAE bank account in the buyer's name, or to the buyer's lawyer's escrow account where one is in use. From the UAE bank account, the funds are converted into managers' checks for transfer day. The conversion takes time. Funds need to clear before managers' checks can be issued. For large transactions, that is days. Plan the fund transfer 2 to 3 weeks before transfer day. Currency conversion at transfer time can be costly. Most foreign buyers convert before sending or use a specialist FX provider for the conversion. A buyer wiring USD or GBP at the last minute and converting at retail bank. Rates absorbs material conversion losses. For sellers, the proceeds are paid by manager's check in AED. Repatriation to the home jurisdiction follows the seller's own banking and tax arrangements. UAE has no exchange controls and no withholding tax on property proceeds. The constraint is on the receiving end in the seller's home jurisdiction. 7. Identity documents. Foreign buyers and sellers present. Their passport valid through the transfer date with margin. Where applicable, their UAE residence visa. Where applicable, their Emirates ID. Foreign passports must show the entry stamp for any UAE visit during the transaction window. The trustee verifies identity against the original passport. A photocopy is not sufficient. A buyer or seller signing through POA does not present their own ID at the trustee office. The attorney presents their own ID. But the principal's ID must have been valid at the time of POA's execution. A POA executed against an expired passport is defective. A POA executed against a passport that has since been replaced needs the new passport documented in the file. 8. Tax considerations. The UAE does not impose income tax on rental income, capital gains, tax on property sales, or property transfer tax. The 4% DLD fee is a registration fee, not a tax. Foreign buyers and sellers nonetheless have tax exposure in their home jurisdictions. UK domiciles are exposed to UK tax on UAE property income and gains. US citizens are taxed by the IRS on global income, including UAE property. UU residents face their home jurisdiction's rules on cross-border real estate. These are not UAE matters. They are not addressed by Dubai's transfer process. But they should be planned for in the home jurisdiction before any transfer is executed. A foreign buyer who has not consulted a tax advisor in their home country before purchase is a buyer who may discover tax exposure they could have planned around. The transfer goes through cleanly in Dubai. The tax arrives later, at home. 9. The integrated timeline. A foreign buyer or seller's transfer compresses the standard time limit only if the cross-border work was started early. 8 weeks ahead. POA drafted. Legalization chain initiated 6 weeks ahead. Funds in transit if the buyer is funding from abroad. Identity documentation confirmed current and matched to POA. 4 weeks ahead. Power chain expected back from Mafaic. Funds expected to clear in UAE bank account. 2 weeks ahead. Final pre-flight check on POA validity, identity documents, fund availability. Manager's checks begin to be prepared. Transfer day. Attorney attends. Checks exchange. Signature. Title transfers. A foreign transfer that was started 2 weeks before the proposed trustee date is not on track. A foreign transfer that was started 8 weeks before is. In the next episode, we will close the first 20. A reflective look at the pattern across the series. Why conveyancing quietly decides whether a deal holds. Why the boring transfer is the goal. That's all for today. This was the Conveyance Desk.